One, two, and three. And yeah, I think we're live. I think we're live. So, welcome everybody, and thank you for joining us today. I'm super excited to be here today with none other than Ruben Cruspino. Ruben is more than an experienced mortgage professional. Ruben has walked this walk for, I think, more than me, more than 30 years. Ruben knows what's going on in the market, what's happening, because he oversees a very large group of LOs, loan officers, that serve the entire state of Florida. So if you either a first-time home buyer, investor, or foreign buyer, they have seen all the cases. So today, my Zoom today, and I'm going to give Ruben a second to introduce himself because we're live on the internet and there'll be people watching. I got four scenarios that we literally came up this week of four different cases. And I want to address those with Ruben, and I have some questions. And at the end, we will always open it for Q&A at the end. So, Ruben, for those that don't know who you are and what you do, you want to go my quick intro?
Sure. Thank you again for having me, Ernesto. My name is Ruben Cruspino. I'm the regional manager for CMG Home Loans. Our team here at the Prime Group works in pretty much all the state of Florida. We have about 20 or so loan officers in our team, over 400 loan officers countrywide. We're on all 50 states, including Puerto Rico and Guam. One of the bigger lenders in the country, direct lender, FHA, conventional, VA, non-QM products, foreign nationals, you name it, we will lend on it, pretty much. And I'm a huge Miami Dolphin fan.
You're a huge Dolphin fan. All right. Yeah. Well, I'm not gonna say a fan. I suffer every year with them.
Right.
Okay. That's what I do. So for everybody joining us, what we'll be chatting about today is some cases, some live cases that some colleagues of yours here at Canvas are dealing with, and then I want to, I'm going to the expert to help me guide them. So Ruben, the first scenario that I have that I was approached with this weekend is we have this homeowner has a house for sale. They're selling a house in West Broward County, right? They've been in the market for about 60 days. They have had some traffic. They haven't had no offer, but they began to go out there and look at other properties. They have found their dream home. They want to move east, so they found their dream home, Ruben. But their house has not sold yet. So they don't want to lose this house, which is in the water in Fort Lauderdale, right, in Tarpon River area. So they don't want to lose the house. They want to be there. This is the neighborhood they've been to live forever. Very lovely neighborhood. And this is the house that they want. But their house has not sold. Now, they have about $700,000 of equity. They only owe about $100,000 in the house. So they reached out and said, hey, what can I do to buy this house if I haven't sold my house? Because I know that if I went to my house, sells and closes, I'm going to lose that property. So what financing options are available for that homeowner that is in that scenario?
Well, there's two basic options for that possible buyer or borrower, however you want to call it. But the historically, the traditional option is something called a bridge loan, where we actually loan them the money on one of the properties to be able to buy, and then once the property that they're selling sells, the bridge loan is paid off. It's a very good loan. It's gotten better. It used to be not that easy to do because you used to have to qualify for both loans. So the qualification process for those type of loans has gotten easier. We can also just do a line of credit, or either whether it's a term line or home equity line of credit, where on the existing property, they can pull the money out and they can use that to buy a new home. We usually have a bigger issue with that as far as, qualifying for the new loan. Obviously, they're going to have to qualify, but they can use the equity from the existing property to buy the new one. Once it sells,
okay, so then
pay off the loan.
Which option is faster? So, for any realtor that's listening that has a property for sale and those homeowners are going to pull the trigger and go somewhere else, right? What is the fastest option if they found their dream home to be able to access that capital to put the other house under contract while this one sells? What is the fastest? I'm not saying cheapest, the fastest option.
The line of credit options is the cheapest and the fastest. There's different options. We have options for people with like very good credit and they'll get obviously the cheapest and fastest option. Then we have the other option with people who are actually self-employed, and we even have a bank statement loan that we can use to do a line of credit. So a lot of options. They just have to really, be instructed, and it's a short-term loan, right? That's how we're looking at it. It's a short-term loan because their home in Weston, I guess, will eventually sell, and at that point, they're paying off the loan anyway.
Okay. So they gotta qualify for what they're borrowing. I mean, I mean, my recommendation was reach out to one of the CMG team, put the house on the contract, put a substantial down payment, put a 90-day closing. If they take it, 120-day closing, that gives you time to sell this one. But if not, just pull out the cash, get it closed. If you can carry both homes, it's worth doing it. It's not a big deal. Houses like that are not, you know the area very well. They don't come in the market very well. It's like whoever moves there dies there.
Pretty much.
Um, One last thing when it talks about HELOCs and equity lines of credit. Is that a full doc type of loan?
It depends on the borrower. So there's a very easy option that we have now in the sense that it's not a full doc. As long as the credit is good, really good, not 700. We're talking 750 plus, and they have a significant amount of equity. We can do a loan pretty quickly on something like that. If we have to go the option, for example, let's say somebody's self-employed, maybe not great credit, then it becomes a longer process just because it's full doc. So it just depends on the borrower, but there is options which it can be done very easily and pretty affordable.
Okay. All right. So then, the recommendation for this realtor is don't lose the opportunity to make another sale. Have a conversation with the homeowner, let them pull the trigger, buy the house that they want, tap the equity, and then we'll sell when we sell.
Mhm.
Perfect. All right. Second thing that I was approached with today, and there's so much chatter about this that is unbelievable, and so much nonsense information. It's a foreign buyer. He's from Colombia, looking to invest in self-rural real estate. He is looking just to buy an investment property. They're being quoted things all over the place. They've been giving rates all over the place. What loan options are available today for foreign nationals, those that can buy properties in the US?
Well, historically, the traditional foreign national loan, which requires typically 30% down payment and some documentation, things like letters from the accountant, possibly tax returns from their country. You may need bank statements, et cetera, to qualify for the traditional loans, and those are still available. However, that business has really moved on, and because it is an investment property, we typically tend to focus more on doing a DSCR loan, debt service coverage ratio loan, which basically has much less documentation, which is highly important for a foreign national, and the rates are maybe, I don't know, a little bit higher than they would be on a traditional one, but it's just so much faster and so much easier. We just have to confirm, number one, that they have some property in their country. In this case, example is Colombia, some kind of documentation that they own that there. And then we should be able to, as long as the debt service covers, the debt, we should be good to go. And again, we have the regular properties, and we can even do it on a short-term rental.
Okay, so one of the questions that was asked from this buyer is that they're not here, they're in Colombia, and they don't want to come here to close. Can they do that? Can you?
So typically, yes, I know there's a process to that. That has to be set up in advance. The answer is yes, that can usually be done. I know that Title Logic is set up to do that.
Okay. Then the other question was that they heard from somebody that all foreign loans have to be 50% loan to value.
No, typically a 30%, well, 70% loan to value. That's how we look at it. 30% down.
30% down. Okay. And then one last one they had was and then they sent me a screenshot from something you see in social media. I know we're live in social media right now, but there's a lot of stuff in social media that God bless them. Is the best way to describe it. Saying that all foreign national loans have to be to an LLC, that they cannot take out loans at a personal name of their foreign nationals.
No,
I always recommend it, but it's not,
right. I probably recommend it to do in the LLC. And again, I am not an attorney or a CPA here, but I know there's FERPTA ramifications for foreign nationals. So yeah, you would recommend an LLC. It's not necessary. Absolutely not.
Okay, and then that same individual saying that you don't need a valid passport or any formal US ID for any of these loans.
You do.
Thank
You
you.
need a valid passport. Yes. We need to know who we're
Yeah,
lending the money to.
yeah, you need to see who the person exists.
Right.
Okay, so then if anybody work with a foreign national, it's not a complicated DSCR loans. You know, it are very common right now. They're an easier type of loan. One of your team members says you also need a visa.
You do.
Yeah, so you need so if you don't have to be here, but you need to have a visa and a passport. Okay, awesome.
Well, they're going to
The
want to see the property they're buying, I'm assuming, right?
Yeah, well, you never know. I mean, some people just buy
Right, right, right.
sight on scene. The next one is a little bit more complex, and this one we're seeing a lot because a lot of first-time home buyers, and I'm not saying FHA buyers, and first-time home buyers have sat on the sideline for 2 years, following the wrong information, and all of a sudden they're 2 years more into rent, and property still price doubled up, and they're buyers. So we got actually three scenarios of first-time buyers, first-time home buyers that are looking to get into a home, their first property. The one of them is asking, can I combine a a seller contribution with the down payment assistance programs to be able to buy my first home so I can buy a little bigger of a house.
Yes, yeah, you can definitely combine it. Every program has their own guidelines, so it's tough to make a blanket statement. But yes, there are programs where you can combine a seller contribution. Again, you're limited. It's not 10%. Typically, it's 6% on FHA. Um, on conventional, it's 3% up to a 90% LTV. Then it jumps up to 6. So there are ramifications, but there's definitely ways that you can get both a seller concession and down payment assistance. Absolutely.
Okay, so those down payment assistance, I know that we had a whole presentation on them recently. Um, you mentioned some of them are forgivable and some of them are not forgivable. So when you mean forgivable, really, they're like, they disappear. The
Yeah, after a
mortgage
certain period of
the
time.
mortgage operates, it
Yeah,
disappears
yeah,
at a
no,
certain time.
it does. After a certain amount of time, usually 5 or 10 years, depending on the program, it does disappear.
Okay. And is there a minimum amount that could be, I mean, a maximum amount, I mean, backward, a maximum amount that this particular buyer can get for a down payment assistance?
So that's where it becomes, difficult, right? We have to put it in a grid. So these down payment assistance programs, many have maximum that you can make. So if you make too much over based on the area you're buying, you may not qualify, right? So, and then for our side, on the mortgage side, you have to make a certain amount to qualify for loan anyway. So it really is a balance on how we can figure out to qualify for the loan. One of the issues that other lenders have, not us, because we kind of focus on this, is it's not we're going to qualify the individual buying the property, right? So let's say it's a couple and we're only using the spouse, the wife, she's the one that we're putting in the loan. That's great. We can just use her income. But if the spouse is making money too, then his income, while not even being used on the loan, can hurt them on the down payment assistance because typically those programs are looking at family or household income as a whole. So again, it's quite a endeavor. But again, we do them all the time. They're very beneficial. It makes you the realtor, really know your market, learn the business, and look like a hero to them. Um, and then obviously we guide you and help you through the process.
The other question that first time home buyer had was, I know FHA, I can do 3.5% down payment, but wait, there's a conventional with 1% down payment. Why would I do the 3.5% when I can do the 1%?
It's all, it's right now the interest rates on FHA loans is actually more favorable, right? So the answer to your question is depends. It depends on what you're buying. It depends on, you get a condo and they require 10% down, then that's out the window. It's just it's very difficult, but there are reasons what's best for a customer. what they can do, what they're willing to do to get into these properties. We're always going to give them the options and discuss what we think is best for them. And they're obviously going to make the decision. There's with down payment assistance programs, there's really at this point almost, no issue not to try to do them. So as long as you're being realistic onto what you can qualify for. Sometimes they just make too much money at the end of the day.
Okay. Okay. So it goes back to what I preach every day. Have a consultation, sit down, look at all your options, and maybe the 1% convention is a better option for you. Maybe it's not. Maybe you need a higher ratio, so you need to go to the FHA 3.5. But sit down. This is not something you can do in an app or a website. This is something that you need to have an expert across the desk from you and look at all your best options. Not everybody fits into the same. It's in the same little box.
You're basically doing two loans. So think about that, doing two loans at one time. And just as our guidelines change from Fannie Mae, Freddie Mac, FHA, they constantly change the guidelines. So do these down payment assistance programs. They change also. So you got to be working with a lender that knows what they're doing, and it's not going to put your buyers' time, effort, and money at risk.
Okay. And then there was a lot of chatter on Monday because I don't know who shared it in social media, and then all realtors went running with it. The Hometown Heroes was coming back. I know that a couple of your loan officers contacted that department directly, and the email, written by attorneys is that they expect funding could be available. And that's to me, that's double negative. So I mean, that is not going to happen. But they said they expect the funding could be available summer of 25. Have you heard anything else? Because when I read it, I'm like, listen, ladies and gentlemen, that they're saying no and no. That we're not saying it's coming or could come. That we expect that could be. I mean, that's two hurdles. So
Right. We're hearing the same things. We don't have any additional hindsight or except foresight into something like that.
To find out.
No, I didn't call Ron today, but it's so political that's very difficult to focus on that. I will tell you though that if your buyer waits for that and it doesn't happen now, they're 3, 4 more months down the line. Waiting is never the option. You can always do something to modify or change something later on. We can't wait to see if Hometown Hero is going to happen. Right now is a great time to buy. The inventory levels are much better opportunities for your buyers. Your sellers are starting to understand concessions and how they can really, with concessions, buy the rate down. So there's really no reason to wait. At this point, buy now, and there's so many I guess tools to help the buyer, lower the rate or get a pretty good deal. I mean, we got programs like you said with 1% down right now. We have other down payment assistance programs right now. I wouldn't wait.
And so if somebody says, you know what, I'm going to wait because I'm going to wait, and August is announced in August, and then will you be at the beginning of the line if you are or you're gonna have to be like at the back of the line because you're gonna be getting pre-approved, finding a house, structuring a deal?
Yeah. So my suggestion, if you have a potential buyer that's going to buy in the next year, they should already be talking to us. Okay. Just because we want to talk, we're dealing with one now. We're actually doing I think we're doing a loan in Illinois. And we're already talking to the borrower now. They're getting married, they got a wedding to pay for, then, all these things are happening the next year, and then they want to buy also. So it's just preparation and constant updates on what's going on. So we got to be ready now. However, when talking about the Hometown Heroes, it doesn't work that way. You can't pre-reserve it. You have to wait till you have a contract to get the reservation.
Okay, I want everybody to hear this. So you need to have an executed contract in your hands, right?
Correct.
Otherwise, you're not in the list.
Mm-hmm. Yeah.
All right. So I mean, it's there's chatter. I read the reply. I think it was I didn't feel that positive about it, but I know that you guys have an in-house program that is almost as good, if not better. It's just a matter of taking advantage of it.
Mm.
The next one is actually a recap. Someone that attended our last Zoom and then was asking about it because they still have more questions. And I said, listen, just watch us again. I said, no, I don't want to watch you again. So, homeowner, Dade County has over 60% equity on their home right now, right? Solid employment, in their 50s, young people,
Very young,
and yeah,
very young.
very young people. So they're looking to make to buy an investment property because they're saying, you know what, I got 15 more years ahead of me before I can retire.
Mhm.
I want to buy something, so sort of try to get it paid off over those 15 years. So I have, although they have their 401k, they want to have another retirement opportunity. So their question was, how can they tap that equity the cheapest way possible, or what is the best way to use that money to acquire something else? Do I go buy something small and buy it cash, or do I take out some money and finance something else? That was they had a couple of questions, but that was
Mhm.
one of them. Like, do
Yeah.
I take out 200, 300,000, buy a little condo and rent a little condo, or do I take $400,000, buy a house for 700, finance 350? Am I gonna have to, do I qualify for that
Mhm.
because I'm gonna have two mortgages now? Or
Right. Well, all are great questions, right? So, I mean, again, the answer depends on their situation. The easiest, cheapest way is obviously to get a line of credit against their existing primary residence and use that money for down payment. However, we got to do the math, right? The math doesn't lie. At the end of the day, if the property that they're buying, is it going to cash flow? Does it make sense to do? Right? Because if they're not moving into it, then it's true investment. So it's either got a cash flow or they're looking at the equity built up later on. It's their choice. But we have to have an idea, right? Because whatever they buy is going up. What do we guesstimate? They're going up about 4% now a year. I don't know, more or less now, or the less. But you gotta look at that and compare it to the cost of the interest. And do they have any other debt? Maybe a line of credit is not the way to go. Maybe even though they have a lower rate, maybe a complete cash out refinance works. So really, again, a conversation on a holistic approach to see where they're at and what they want to do and what are their really goals. If it is to get cash flow now, we have to look at it one way. If they're okay, just basically, as long as it pays for itself and looking for an equity payout at the end, that's another different conversation. If they're looking to buy something now, in their 50s, so they can move there when they retire, let's say when they're 65 or whatever, that's a whole different conversation. So I think, again, it's going to depend on the individual, but there's so many options. We have solutions for everything. There really is. And especially when they have that kind of equity, they should be able to find a way to get the cash out and buy, even the DSCR program. There's really no qualifying, so as long as they have the property's cash flowing.
so one of the questions they had was, does the income from the rental property, does that assist me on the qualifying, or do I need to qualify solely based on my income and assets?
No, no, on the DSCR program, we're definitely looking at the income from the property, the potential income, right?
And they were saying that a second home the one of the other questions they had was, some second home programs allow you to as little as 10% down payment. Was that
Yeah,
a
that's a
second home?
second home, second home. Second home,
And
you
for
are qualifying. You're not using the rent on a second home.
okay, so second home, yeah, you got a lower down payment, but your income has to.
Correct. You got to qualify with your everything, the new home and any other debt you may have or issue. So second homes are not investment property. Just got to keep that in mind. It's just somebody that owns a second home.
Okay, if they want to go something bigger, I know that you touched last time on the FHA max ratios. If they want to go something bigger, fourplex, sixplex, eightplex, are those also DSCR loans, or that already falls out of the
No,
bucket? Or
no, and at the end of the day, every commercial loan, right, is a DSCR loan. Whether you're buying a warehouse to, put your office in or whatever. At the end of the day, the way the commercial banks calculate the income, it's the same way in the DSCR loan. So yeah, no, anything that's considered really investment can be done on a DSCR loan, whether it's a one property, a fourplex, eightplex, can be done as a DSCR loan.
I think for these buyers, their scenarios, they're not, like I said, they're comfortable right now. They're not looking for cash flow. If there's any extra cash flow, literally they said it's vacation money. That's literally what they called it. They're just looking to actually try to pay it off as on the next 15 years.
Right.
I think the DSCR might be a better scenario. You know, so you said 25 or 35
Percent
on the
down?
DSCR, on the
20.
DSCR down
20.
20.
That's for
Okay,
an
but
American or a non-foreign national. Foreign national is different.
okay, and it has to be that 1-to-1.
No, it doesn't have to be 1-to-1. I mean, that is a great rule of thumb. We want it to be at least 1-to-1. We do have programs for less than 1-to-1. Those programs do have a higher rate. And we have a program where we can use interest only also, so which helps it get to the 1-to-1 ratio. So again, a lot of options. You know, like I always say, you know, dealing with a company like ours, CMG is so big, we have everything. There's not an option that we don't have. So it's a matter of understanding what's available to your particular buyer and what their appetite is for risk. That's all.
Well, Ruben, thank you so much. I think that the biggest takeaway from today for me and for everybody listening is if you have a prospective buyer, it's better to begin today and not at the time that you're going to go out home shopping, because there might be surprises at that moment. It's better to have the conversation since now. So set up a roadmap. Like it's an investment. This is your investment. A home is your largest investment ever for most people. So set up a roadmap. So see, maybe everything is perfect right now. You can, go out and write a contract this weekend. But maybe by tweaking this and that, then you can get a better rate. You don't have to put as much down payment. So there's a couple of things you can do. So my takeaway is that for everybody is, if you have somebody, sit them down, got a buyer's consultation. Everybody knows that I preach on that all the time. Get a buyer's consultation going and have them understand what their options would be. And maybe their options are better than what they thought. Maybe with 600,000 in equity, maybe he doesn't have to buy one. He can buy two properties. And then,
Right.
when he hit that magical 65 or 67, he can have a very comfortable retirement. So there was one more question that came in, but we're out of time. So I'm gonna go back to Ruben, and we'll probably do one next week. They were asking me about house hacking, but in 2 minutes, in 1 minute, you're gonna be able to house hack anything. Thank you so much, everybody. Ruben, best way for anybody to get a hold of you?
My cell phone. I'm very good about returning all my calls and texts. So 954-661-2790. Text me or leave me a message.
All right. Thank you, everybody, for joining me today. Thank you for all of the wonderful questions that were submitted. See you guys next week.
Happy Easter, everybody.
Happy Easter.